Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with trading. I think we all understand that. No one trade is guaranteed to profit. So obviously you want to manage risk in a way that makes sense for you in terms of trade size, exposure, that sort of thing. And we'll go over some ideas in that regard using some tools that are available in our web trader. Directly in the order window, you'll see that it helps to calculate exposure and potential profit, really making the risk management side of things quite a bit simpler. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader, which in addition to the advanced risk management features, has some nice functionalities that assist you with your technical analysis and fundamental analysis. And you can use our web trader whether you're trading on an MT4 account or an MT5 account, and you can switch between them right from within our web trader from one location. And also the same is true for our Ava mobile app, which can be found in the major app stores. You also can find links to the app stores here on our website in the AvaTrade app section. And so Google Play and the Apple App Store link locations are there. Now, if we log in from the upper right corner of our main website here, we'll be in the web trader. And today's focus is technical analysis, but it makes sense to talk about the fundamentals a bit before jumping into the technical analysis. I always like to say you want to get a feel for which way the wind is blowing, so to speak, in terms of the direction that you think the price movements should go from a fundamental perspective, and then use the technical analysis to kind of zero in on your preferred entry and exit locations and to see if even the price is at a spot that's opportunistic for you or not as you apply your technical analysis strategies. Now, one place we can look for quick news from a fundamental perspective could be the market buzz. And I know there's been some talk about Disney of late. Their numbers came out, their quarterly figures came out recently, and they actually were better than expected. And while they don't trend as much as Apple and Nvidia and Tesla and Microsoft, the bigger circles in this pictogram that are trending even more, if we find Disney here, which is here, what we'll find is that there is a trend analysis on Disney from a technical perspective that shows in the near term, Disney's expected to fall. It says price may fall 10%. And so we can take a look at the technical analysis side of things, which shows a downtrend that's expected to continue all the way down near $80 a share. Okay, and Disney's come under some pressure, fundamentally for the past year or so. The phrase I think was almost created with Disney, go woke, go broke. They came out in support of some policies in the U.S. that are maybe viewed as to the left, maybe alienated half of their customer base, and there's been a lot of boycotting and talk about not using their products from certain political leanings in the U.S. And so I think they've come under some pressure, and that pressure's maybe expected to continue in the near term. And so fundamentally, we can understand why there's been such a downtrend and why in the current environment where there was a sell-off globally, which really was triggered by recession fears in the U.S., we start to see multiple reasons why you might be bearish on a stock like Disney. And so from a fundamental perspective, this technical signal might make sense to you. And if it does, then in the short term, to expect maybe a 10% drop as the trend analysis shows here and the signal shows, maybe that makes sense to you. And so what we see is that there's what we call a pivot line here around 92, this blue line. If it goes above there, then they say, okay, that's an uptrend. That's where the trend must have reversed, and they would expect further upside towards the green lines up here. And that's up around maybe 97, something like that. And as we look down, if it continues to drop, there's support maybe around 80. Now, the bigger picture, something to keep in consideration. Disney's returns, which just came out, I believe today, they had better earnings per share than expected. They had better revenue than expected. And it says, Disney returns to profit as streaming business makes money for the first time. They're always expanding, companies like Disney and others that have really large market share with different products. And so Disney's no exception. And what we see is the streaming business that they're trying to get into to compete, with Netflix and other companies out there that offer streaming movies and really offer in the digital realm a lot of variety. What we see is Disney did well, and it really helped pull them up into profits and made their numbers better than expected. So this news is actually bullish with what we see, a bearish technical forecast. So these two things aren't necessarily coinciding, the short-term forecast and maybe the long-term forecast. Okay, so now what we can do is then go to the chart. Now that we've done a little bit of a fundamental review, which I know is not our focus in this session, but now we can maybe take a look and see, well, what's going on from the technical perspective beyond that signal that shows an expected 10% drop maybe in the short term. So I can pull up a Disney chart. And certainly the jobs numbers that came in Friday with the non-farm payroll out of the US and the earnings numbers that showed wages were dropping and hourly wages dropped. The amount of expected jobs was expected to drop, but it dropped even further than expectation, really showing maybe a larger slowdown in the U.S. economy than anticipated. The unemployment rate also jumped up, I think, from 4.1 to 4.3% in the U.S. with those same numbers on Friday. And so it really sparked a global sell-off. And so if we take a look, the one-day candles, this is a huge downtrend. I mean, we can draw these lines on here, and you see how clear the technical downtrend is over the past weeks and months for Disney. And so to expect that might continue, especially with the fears of recession now that hit from Friday, that's not surprising in the short term anyways. And so we need larger candles. Let's go to 1 week candles. And if I want to maybe try to pull this chart up a bit, sometimes it'll cooperate, sometimes it won't. Let's switch to 1 day candles, and I should be able to get it to cooperate. There it is. Okay, so sometimes you have to click off to the side, and then if you click on the chart, you can drag it up and down. What I see off to the left here on the 1 day candles is a support level right here. Okay, and that's very clear to see on the 1 day candles. We go back to the start of this year, and this was the support price on the 1 day candles. You see it here where it hit and went back up. And so if we follow that price across, that coincides exactly where it bounced from just a few days back. Okay, and then just broke that price in the past few days. Okay, so if we go back a couple weeks, it bounced as expected off that support, tested it again and bounced, and then broke through. And then is kind of seesawed back and forth on that price, but is currently below that support level once again. So this is where the technical signal comes in that it broke the support level, and the fact that there are fears of recession, which drove down the stock market in general globally, it feels that the technicals show you a technical downtrend on the one-day candles with a breakthrough of that support, and the expected drop down near 80 down here for the take profit. That's what the signal showed us. And from a technical perspective, it's a classic broken support on the one-day candles, and the next support level, if we go to 1 week candles, you will see is down here. So here's the one-day candle, one-day candle support and resistance here that just broke. On the 1 week candles, this is where the take profit was suggested, about a 10% drop from 88 down to 80. And if we go across, here's the 1 week candles where you find support in this area on the 1 week candles. I could drag it down just a little further, and you see on the 1 week candles here, support, support, support. It couldn't break 3 tries on the 1 week candles, couldn't break below this price before climbing. So now that we broke below this support level, the technical signal that we saw when we were in the market buzz area says sell and take profit down near this support, down around 80. Okay, and that's actually just before the support down around 79. Okay, so from a technical perspective and a fundamental perspective, this might make sense. The one thing standing in the way of this being a perfect setup is Disney's numbers just came in better than expected today. Okay, so one thing working against you here, their numbers came in better than expected, both on revenue and earnings per share. So the technical trend says sell. The larger global economic situation, recession fears, the big sell-off that happened earlier this week, all of that says sell. So it agrees with the technical signal from Trading Central. The one thing that you have to consider, though, is their numbers came in better than expected today. All right. So this is an opportunity that some may say, hey, I think it should drop based on the one-day candle breakthrough, which we saw here. And let's see if I can get the chart to cooperate. There we are. And so here's the one-day candle support. Broke through today. Will it push down further? Okay, that's the question. Now, if you want to take a double approach here, to go with the signal to sell, because it is a technical breakthrough and there is a lot of fundamental news of fear out there about recession. So if I want to sell on this and follow that signal, I can do a double move. Okay, and I'll show you what I mean. So take profit down around 80, down around this support that we saw back here on the 1 week candles. See, support, support, support. These are one-day candles. And so just before that support is 80. So we could say, without having to break the lower support level, if we take profit at 80.5, let's say, and stop loss just above this broken one-day candle support here. Okay, it broke this support. It only would have to go back above that to show us a reversal. So if it hits 90, it's an uptrend again. It's back above what should act as resistance here. So stop loss 90 would show a reversal. We don't even have to be very far up to see a technical reversal back into an uptrend. So from an opportunistic perspective, this is a nice trade. Technical breakthrough, some fundamentals on your side for further dropping, technical signal from Trading Central that it's a sell, and you've got a better than 4-to-1 ratio potential profit to risk. So if you're right 1 out of 4 tries with a setup like this, you're breaking even. And if you can do better than 25% with trades like this, then you should make a nice profit. Okay? If you can be 30, 40, 50% accurate with this type of move, you're doing really well. Okay? So now I just need a trade size that is proper for the amount that I want to risk. Maybe I want to risk 500 per trade or 600 per trade, whatever that is. So let me adjust my trade size, and automatically it adjusts the amount I'm risking and what my potential profit is. Still the same ratio, about 4-to-1, possible profit to possible loss, because the technical setup is the same. But now I adjusted the trade size, and so I'm risking a little less than 1% of my account for this particular balance that's showing here. And maybe I'm comfortable with that, risking about 1% to try and make around 4%. So then I make my move on Disney. I have multiple reasons why I might be selling, okay? Using different tools that are available here on the platform. Now, at the same time, I acknowledge, boy, I'm trading against the earnings numbers that just came out, right? So at the same time that I'm selling with the signal, I can also, and that's a short-term move, that signal. It's not a long-term move. Very short stop loss up here at 90, a pretty quick take profit down above 80, doesn't have to break any support levels. It's a pure technical move, but backed up with some fundamental momentum globally from the recent sell-off. Now, at the same time, I can do a second move on the same instrument, but in the opposite direction. Why would I do that? Because if I look at the 1 week candles, which we were looking at before, you talk about an opportunistic setup. On the 1 week candles, the support level we just said was 80. So I only have to put my stop loss down at 79, and I'm below that 1 week candle support. And then my take profit, I might say I'll only put it halfway up to this resistance up here to where Disney was just less than a year back. So if I go down on the 1 week candles, maybe to this level here. Okay, this was an old support from the past where it pulled down and then bounced back up. Okay, so I don't even need it to go to this resistance up here. If this decides to reverse and come back up to this old support, this could act as resistance around 105. Okay, so even being now this is more of a long-term move, right? I'm looking at not 10% move. I'm looking at going up more than 20%, 25%, and against the greater fears of recession right now. So this is a move that might take a bit longer to come to fruition. But going with the idea that their earnings numbers show and their overall profitability is showing that they've made the turn with these most recent quarterly figures that came out. And so while the current momentum might be down for a short-term move, a longer-term move where you're going to be more patient maybe can be in the opposite direction. At the same time that you're selling on the short term, you could be buying on a long-term move, okay? And, it doesn't have to be a market move. I'm setting it up now as a market move, and you see it's about 2-to-1 ratio, potential profit to risk, even with getting my stop loss down here below the 1 week candle support. I could do that and do a market move and buy now. Another option with that same type of price setup around 79 and 105 would be to say execute when price hits. So I'll do the same take profit and stop loss, but only when the price breaks back up into an uptrend. And remember, we said if it hits 90, it's broken back into a technical uptrend. So the market move was a sell. The buy is a pending order if it ever does break back above the current resistance and hit 90 per share. Okay, and we could even say 90.50 so that it has to break above that stop loss on the sell before it would open. And so now we're looking at not as good of a ratio because we're getting in at a higher price, but still better possible profit, almost 8,000, compared to possible loss, 6,325. Okay. Now I just need to adjust my trade size to risk the amount that I'm comfortable with. So if I do 0.05, which is 50 shares, I'm risking less than 1% to make about 1%, a little more than 1%. So I could do 0.06. Now I'm risking a little over 1% to make a little better than that. Okay, and if it's a longer term move, maybe you're more comfortable risking a little larger amount. So maybe I do 1/10 of a lot and I'm risking near 2% to make, I don't know, something towards 2.5% profit on the account, something like that. And again, this is a pending order. Execute when price hits if it goes up and hits 90.5. Okay? And so at the same time, I'm selling on a signal that says in the short term it's expected to drop. At the same time, I set up that if there is a technical reversal, that maybe we go with those positive earnings numbers, because if it's enough that those positive earnings get it to break back above this broken support, this should act as resistance. If it tries to go up and it does break above up to 90.5, well, then those earnings numbers must have created some positive momentum, and it might make sense that then our pending order kicks in for a longer term move upward. Okay? So just walking you through the fact that we can look at a fundamental news narrative that has mixed information and trade in one direction on the near term information and in another direction on what you consider more of long term information that would affect the long term trending moving forward. Okay, and so opposite direction on the same instrument, diversifying short term and long term strategies even on the same instrument can be done. Now, we can also look, and if anyone has an instrument that you want to request, asset that you want to look at the chart, let me know. You know, the Euro USD is interesting right now. You know, the USD, it's been pretty volatile, especially with those numbers that came out Friday that showed a real slowdown in the US. You know, there's expectation now that the US is, you know, I don't want to say guaranteed, but almost guaranteed that they might lower interest rates at the next FOMC meeting, okay, at the next rate decision, rather than keeping them the same as they've done multiple times now. It's expected that before the end of this year, at least one rate decrease in the US on the federal interest rate. And so that tends to be bearish for a currency, meaning makes it weaken if you expect interest rates to go down on a currency. So that's something to keep in mind fundamentally out of the US. And if there's now fears of a recession in the US because the unemployment rate jumped up, jobs numbers were bad, income numbers dropped, that's even more reason maybe for the USD to be a bit bearish, okay, or weak, we could call it. So then we look at the Euro USD, and we know that, you know, traditionally maybe the Euro USD has been up around $1.18, $1.20, depending what years you're looking at. But certainly many would consider the euro oversold right now from a longer term perspective over the years at being below $1.10 right now. Okay, and I know it dropped down to parity and below with the US dollar. It was at, you know, 99 cents, 98 cents a while back. So it's come up some already. But there is some reasoning out there fundamentally for the US dollar to be a bit weak. Sometimes the economic fears can cause a strengthening of safe haven currencies, and sometimes so the USD can strengthen with fear. Not what happened this week. This week with the big stock market sell-off, USD weakened rapidly against the euro. And I believe, from my perspective, it's because this was fear about the US economy specifically going into recession. This is what the fears were about. And so who would want to buy the currency of a country that if it's feared that they're going into recession? And so this fear actually, with the stock market dropping, was not connected with the strengthening of the US dollar. The US dollar actually weakened while the stock market was dropping. And so we see that here with the big rise in the euro against the USD, and we see the pullback here. So whether you're looking short term or long term, I see a support level on the 1 hour candles. So if you think the USD will continue to be bearish with the recession fears and with the realization that likely the US will be lowering interest rates sometime soon, then it makes sense from a fundamental perspective to trust this technical support level to buy off of it. And in the short term, maybe it challenges the high that it hit yesterday or earlier this week. Okay, I believe this was yesterday where it peaked up here. Okay, that's up above $1.10. It's at $1.924. We're talking 75 pips up without having to break yesterday's high. Okay, your stop loss only needs to be about a quarter of that distance down to be below this week's support level. Okay, that developed over the past couple days. Okay, so what we look at then here, if you want to take this technical setup, if we're buying, take profit up at $1.10, nice round number. That's before yesterday's high. Don't even have to break that high. So if I go to $1.10 even, many times there are reversals as you hit round numbers. So $1.10 makes sense if you're doing a short-term move. Stop loss, as long as it doesn't break the low that it had today, then we're good. That's $1.09. So $8.90, let's say. That's 10 pips below this support level. So stop loss is all the way down about here. Okay, all the way below this wick, even from Monday. Okay, so below this week's low, below the support area of this week. And you see the risk is less than half of the potential profit. Now we could move this up if we want and have it just today's low as the support, and we'd be risking maybe only 25% of the potential profit. I'm a bit more comfortable with the longer stop down around 108.90 to be below the entire week's support level, so that if you do take the loss, it's when you're more convinced that it's an actual downtrend. Okay, and so now with this setup, we're looking at over $5,000 risk, right? And so I need to adjust my trade size now. If I do one lot, I'm risking 362. I probably, for my sweet spot on this account, if I'm wanting to risk around 1% per trade, 2 lots, it's a little more than 1%. So I'm looking around 1.8 or so with the lot size. So now I'm risking about 1% on my account to make over 2%. Okay, and I'm using 1% as an example, but you can risk the percentage that makes sense to you on the risk side in terms of your risk tolerance and your balance size, etc. So this setup doesn't need this week's high to be broke in order to make more than double what we're risking, and it would have to break this week's low for us to lose. So it's an opportunistic setup from a technical perspective, and it feels like we're in the direction that the fundamental news says you should trade as well. So from a fundamental perspective, horrible numbers out of the US on Friday, increased expectation of decreased interest rates coming in the US. These are all reasons for the USD to be weak, fundamentally speaking. So those two things, fundamentals and technicals, are in alignment here in a trade like this. Now, some crazy story could hit right now. Maybe the situation in the Middle East goes bad and people run to safe haven currencies and the USD strengthens, breaks the support level, and this trade goes bad. That could happen, right? That can happen with any trade, that unexpected news or big news can hit and mess up a trade. But you know, we all understand that as traders that unexpected things can happen, and if that happened, we have a small risk. But the majority of the time, big unexpected news doesn't happen, and hopefully then your trade plan can carry out more often than not in the right direction. Okay. Any questions, comments before maybe we look at one more chart? I'll pause for a moment. Okay, I don't see any questions popping up, so everything must be clear. We could take a look at maybe the commodities. We'll look at gold as an example. You know, with a weak USD right now, makes sense that gold could climb. And you know what happens if you lower interest rates too quickly? Inflation comes back. And gold is one of the #1 safe havens when there are expectations of inflation problems, which is partly what drove gold up to all-time highs over the last year and a half, as inflation was just way too high in many areas around the world, Europe, US, UK, etc. And so as inflation has come down, there's less of an inflation fear. But hey, if the US looks like they're going to lower interest rates, that's a reason for the USD to weaken. And as currencies weaken, prices go up. And so hence inflation fears could come back. So if we look at gold, maybe on a little larger perspective, let's go one-day candles, we can see that it pulled back from all-time high areas over the last week. Okay, these are one-day candles, so we go back 1, 2, 3, 4, about 5 days, and we were up here in all-time high territory. You know, what else would be a reason for gold to go up as a safe haven? Fears of all-out war in the Middle East, potentially. You know, there's some serious concerns about, you know, global supply of oil as being, you know, one of the main commodities that could be affected here. So, you know, not just gold as a safe haven rising, but you could see something like crude oil jumping up as well if indeed war escalates in the Middle East. And so now we've got a couple reasons why gold might go up. Fear of war, a weakening USD because of expected interest rate decreases out of the US. And so you start to look at the one-day candles and you say, maybe I trust this support level down here in the one-day candles. Okay, we see it had trouble since it came back up a couple weeks back, breaking much below the 1263 area. It tested it once, went back up, twice, back up, a third time just a couple days ago, and back up. Okay, so if we get a stop loss down below this support, say 2348, 2347 and a half, and a take profit before the all-time high, doesn't have to break the all-time highs, then from a technical perspective, again, we're in the direction of what could be viewed as the fundamental momentum for gold right now to climb against a weakening USD. And at the same time, from a technical setup, it looks opportunistic. And so if we're saying take profit on gold up around 24, say 68, that gets you out before it ever has to challenge the all-time high, 2468. Stop loss below this support level, going back a couple weeks worth of support, 2347, 2348, right in that range. Okay, not quite 2 to 1, but better possible profit compared to risk. Okay, now we just need to adjust the trade size to fit this technical setup. Support level here, stop loss below the support, resistance up here, take profit just before the resistance. And so if I go one lot, I'm risking 4,500. If I go 0.15, I'm risking just over 1% to make near 2% on my balance. Okay, if I'm comfortable with that, then I'm in on my trade. Okay, that's maybe what you'd view as a longer term move. It's not a small move in gold to go back up to 2468. We're talking 70, 80 dollars per ounce, somewhere in that area, in order to reach the take profit. But we also have seen gold move that much in one day before. So what might feel like a longer term move on gold sometimes can happen actually pretty quickly. So we'll see. Can keep an eye on this example here. But the point of the session that we're looking at with each of these trades is to take into account the fundamental news as you see it, both short-term and long-term perspective, and then take trades that set up from a technical perspective in a way that you think is opportunistic for that direction. Okay, and even to diversify short-term and long-term at the same time. So you're not just diversifying between instruments, but also in terms of take profit strategy and stop loss strategy for short term and long term. So you're not putting all your eggs in one basket on one instrument or one instrument class, and also not putting them all on short term or all on long term strategy either. Okay. All right, everybody. I think it's a good spot to stop. Usually after 40 minutes or so, we start losing attention span. So I think it's a good place to end things. Does anyone have any last questions, comments before we call it a night? Okay, great. And just keep in mind, all of the sessions are recorded. By tomorrow, this will be on our YouTube channel, so you can check it out again. If there's anything you want to review again, if you missed something or I went too fast, you can always go back through it. Not for the price points necessarily if the movements have already occurred, but to go over the strategy concepts and how we use the different tools on the YouTube channel. All right, everybody, thank you for joining. Good luck with your trading. Bye for now.